Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants.
This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Podcast guests and their clients may maintain positions in the securities discussed in this podcast.
All right, we're live. We've got a few listener questions, some of which had been hidden in our Twitter again. So a couple of them are a few weeks old or older. But yeah, we'll get to a few of those today. Let's kick off with some good news. I pulled out a few ones this week. We've got Amazon's driverless robotaxis are taking the Las Vegas streets. So Amazon's entering the robotaxi race. Students switch to AI to learn languages, basically using GPT to learn language and some other like GPT-based AI things much better than existing language tools, because you can have conversations with them. You don't have to get embarrassed doing things wrong, and they can correct and whatever else. And this one, I honestly, it's included in good news, but it's more because I want to talk about it. I don't know how close, but the headline was "Space Elevators Inching Closer to Reality," which I thought would be something you might appreciate, Andrew. The actual gist of it is like China came out and saying that they think that they have developed the carbon nanotubes that can create a space elevator, but I don't know if that's really that. This is one more just a cool idea.
Oh, it's totally possible. It's an engine, like the physics work. It's just we need a certain tensile strength to be able to do it. So once you crack that, it's just a matter of building it. But yeah, it really changes the game, because so much of stuff putting stuff into orbit is just the fuel load itself, right? So the economics change radically.
So the gist of it, for anyone who hasn't heard of this, was proposed in 1895 apparently by a Russian physicist or something. But basically the idea is you have a very tall, a structure that reaches up into space. And the way that you would achieve this is have an orbiting object up in space that then lowers down a tether connected to the Earth of a very strong, high tensile strength material. And then that you can use that tether to like run cargo up and down, just like you would, electromagnetically, like any other elevator. And so you literally have an elevator that goes from Earth into space. Andrew says it sounds really crazy, but it is completely feasible. And it's just a matter of creating the material strong enough. And about a decade ago, I think it was, or maybe it was 20 years ago, a NASA scientist came out and said, like, with the progress in that, carbon nanotubes, we've basically found that material, but so far we haven't been able to scale it up. And anyway, some Chinese scientists claim to have an ability to scale it up. We'll see, but I thought it could be very good news if it ever happens.
Yeah, definitely. Yeah, the other bit was that a human beat AlphaGo.
Yes. Talk us through that.
I only saw the headline and skimmed it, so I'm not going to be deep into it. But basically, if you haven't seen the documentary, I highly recommend it. But the team at Google, they've got this AI called AlphaGo. Go is a really complex game. It's far more so than chess. Like there's more states on a Go board than there are atoms in the universe. And so it's not something from an AI perspective that you can just brute force, like just try every single move and see which one works best. You do need a bit of creative thinking. Anyway, I beat a guy called Lee Sedol, who was the Grandmaster, and it just came up with all these really novel, interesting moves. This is a game that's thousands of years old, and it beat the Grandmaster definitively. And it was sort of like Go was always one of these milestones on the AI spectrum, which was always sort of like, we'll never be able to get a computer to be better at humans than that. And then it was very rapidly. And so it's kind of interesting that a human has sort of come back and beaten it. And it seems that it's done it in a way which is, again, trying to, just doing things that are just very unexpected and just not within the data training set. My assumption is that the AI will go, oh, that's cool. Now I've got that in my tool belt, and now you're screwed again. But the fact that it can still be beaten was noteworthy. One for the humans.
Yeah. So, and the way that it did it was they designed a machine learning algorithm to just exploit the weaknesses of AlphaGo.
Right.
And so AlphaGo was then also defeated, I think it was after that documentary, or was it during, by AlphaGo Zero, which basically restarted again. AlphaGo learned from human games, and then AlphaGo Zero learned from just nothing, just from scratch, hence the zero, and did it in 3 days, became better. Like it beat AlphaGo 100 to 1, like 100 to 0, like complete dominance. But yeah, anyway, the humans did it by using machine learning to figure out a strategy to exploit, and then taught a human how to do that so the human could do it without any other AI assistance.
Okay.
And the strategy was really basic. It was like an amateur strategy of just building like a ring, of like a really obvious ring around your opponent, which is kind of what you're trying to do in Go. And basically, because the AI maybe hadn't ever seen anything that dumb or hadn't tried anything that dumb itself, it was just like completely immune to it. And like the humans beat like 14 out of 15 times or something. So
Wow.
Anyway, a good one for humans. And also it kind of showed, I thought the interesting thing that because you brought it up, but I thought when I dug into it, it also shows that although we think of these AI as having like, they're thinking the way we do, they're just very different, source types of intelligence, I guess. And so like just the basic, like a human wouldn't fall for that trick. Like even a beginner human wouldn't, a beginner human wouldn't do the thing that defeated the greatest one of all time. And so we still have an edge, I think, in learning in the moment to novel situations. Like these things still need to be trained, and we can still, do, like, I think a human would adapt. They wouldn't lose 14 in a row, for instance, up against that strategy, even if they hadn't thought of it before, whereas this thing did. So, cool. All right. Well, moving on. We've got quite a few listener questions. Thanks very much hitting us up on Twitter, a few of which were hidden away thanks to Twitter's mechanisms, but a few have unsurfaced. So I'll just run through them. The first one was really great from Harrison, so I'll just read it out. Hey guys, firstly, thanks for all your knowledge that you share. I think listening to you through chat is the best resource around. Getting your thoughts on a wide variety of things is so insightful. Okay, great question, Harrison. All right, now I'll go on to the rest.
Next one.
So I reached out and pick your brains about behavioral investing and personal biases. I've been reading a lot about this of late and feel it's such a powerful factor in investing results. I've been trying to do some personal reflection as to what biases influence me the most, and I think it's a split between anchoring bias and confirmation bias. I would love to get all three of your thoughts on what you think are the biggest biases or behavioral traits that you think influence you and how you mitigate their effects when investing. I want to make a conscious effort going forward to not let these be roadblocks, but rather, hopefully, open my eyes to opportunities. I found it extremely interesting and enlightening doing this exercise and would recommend anyone to do it, regardless of where they are on their investing journey. I'm sure you three leading the discussion will make an interesting pod. Cheers. Cool. Do you want to jump in, Andrew? So Harrison's asking how you think about biases and those that affect you. He called out, he thinks for himself, anchoring bias and confirmation bias. Basically, what are the biggest biases or behavioral traits you think influence you and how you mitigate them?
Definitely those two. I don't even have to think about it. 100% those two. It's really interesting with this field is that being aware of it is important, but I don't think it's something you can ever completely overcome. Like it's just, it's very impossible to kind of do, to my mind. I've long been a very strong believer that the best way to do it is to write your thoughts out. Writing is refined thinking. I think Stephen King said it best when he did that quote. And writing out an investment thesis forces you to clarify your thoughts, and it also gives you something with which to hold yourself to account. So when you write it out, and then later on when you start shifting your position, as you will, to protect your ego, you can at least sort of say, well, this clearly wasn't in my thesis at the time. Or I said at the time that if this was to happen, that this would constitute a broken thesis and I would be out. And again, it's not a foolproof mechanism, but I think it's much better than not doing that, because you will twist your recollection of events and memory of events, and you will do whatever you can do to preserve your ego. And so I think that is super, super, super powerful. And this is going to sound like a blatant plug, and maybe it is, but that's strawman, right? Like it's called that because I genuinely think the best way to improve an idea is to challenge it. So I would say, and look, don't use strawman if you don't want, but do it on Twitter or do it on Reddit or put it publicly, because then it's sort of like it's out in the public domain and others will probably be better at holding you to account. And it's not about trying to sort of say, I told you so, or get into arguments with people, but it just forces you, because we are such social creatures, I think it forces you to be more careful in your thinking. Gosh, if I'm going to put this out there and other people are going to read it, I want to be extra careful about it. And
can I just jump in on that point?
Yeah. Please.
Look, I think that's super valuable, and I'm sure that this does not apply to Harrison and most of our listeners, but there's actually another cognitive bias called like the backfire effect. So that would be where you put out your thesis for such and such a stock, and then it, people say, oh, no, you're wrong, Weebit Nano is just a load of rubbish, and then their attacks on your thesis that you like the chart or whatever is actually makes people think more strongly about their belief, and they start getting into a habit of rejecting all arguments against their idea. And so I'd just be really careful if there are any listeners that may have noticed in themselves this backfire effect where somebody tries to have a go at your idea and the result of that is that you discard the idea and just believe your idea more strongly. That is an absolute recipe for disaster as an investor. And the point is, if someone has an argument against your stock and you can dismiss that argument, it shouldn't make you like your stock more. It should just make you, basically perhaps give you useful information why other people don't like it. But then you'd need to have a thesis of why that opinion would change. So I'd just be really careful. I think one of the nuances on biases investing is that we're never going to overcome these biases. So absolutely step one is just be aware that they're probably acting on us at all times. And then secondly, some biases are way worse than others. So for example, the confirmation bias, whilst it can definitely lead to bag holding, it also could be really useful in terms of being a long-term investor. So if a 25% drawdown in a stock since you bought it is enough to make you, if that is always going to freak you out, you're never going to have a 10-year hold, long-term, multi-year, multi-bagger that is like, it can be a true life changer for you and boost your returns if you always get scared out too easily. So I definitely have confirmation bias. I think you have a lot of confirmation bias, Andrew, but I've also seen when confirmation bias has actually worked for you because it has meant that you've held on to a stock through perhaps a really rough ride. And this can be useful because the way I tend to think about it is I say, I don't want too much confirmation bias. I prefer sell the stock now. And then once things get better, I can buy back in. But the problem with that is anchoring bias isn't just on, say, the price, you bought it at. It can be the price you sold it at. So if you and I both owned a stock, Andrew, and I suffer more from anchoring bias and you suffered more from confirmation bias, what might happen is it starts going a bit worse. It goes down to $1. You might have confirmation bias that keeps you in it. I might sell, and then it has a tough couple of years. It drops down to 80 cents, 60 cents, but then it comes back up. And when it passes through $1 again on the way back up, when I sold, you're like, oh yes, great. Maybe you even bought some more at the lows. And whereas my anchoring got me out of that, and I then could get to the point where I'm anchored to that $1 I sold at. And now that it's $1.10 or $1.20 on its way back up to $2, I'm anchoring to when I previously sold and no, I want to get it back at that price. And so that could keep me out of it. So I think that, you've got to think about, I guess, the positives and the negatives of each bias, because I guess a tree falls the way it leans. So, just being particularly aware of where you tend to fail yourself is worthwhile.
Yeah, I'd agree with that for sure. And I think you touched on something really important, Claude, which is that these things are kind of double-edged swords. There's kind of in super forecasting, they talk about the best forecasters balancing between two different opposing biases effectively, or two different things that can lead you astray. And so in that case, confirmation bias, maybe the opposite is openness. And so it's good to be open, but if you're too open to changing your views, then you jump around and you become hyper trading and you get lost in the noise. Whereas, and then on the flip side, if you're too biased towards persisting with your existing views, then you miss changes to those views or new evidence. And so the optimal strategy is to be balanced between the two. But for each individual, the optimal thing is to kind of write the way that correct for your natural leanings, basically. So, and recognizing that you can move around as well. But if you're leaning too far to the right, say on the bicycle, you need to, put more power on the left. And I think that's where these things it can be really complicated when you're learning to invest, because you'll hear someone say, the way to invest is to do this. And what they're saying is the thing that works for them because of the particular way that they lean. And so if you start doing it, and let's say that you already lean towards confirmation bias and they naturally lean towards too much openness, then the thing that you pick up from them might be to lean even more towards openness, and that would actually just make you fall over, basically. If you're naturally the opposite of them and you try and do what they do, you're just going to lean the wrong way. If you're on a bicycle and you normally lean right and they normally lean left, and they're like, oh, you lean right more, and they're like, you start doing that, you just fall over to the right. So I think that's the way that I think about them. These are a lot of the biases have trade-offs, and you need a balance between the two. But I think the other thing I'd just say quickly is you called out the two big ones. I read a piece recently, I was just trying to find who said it, but they're talking about reviewing all the behavioral bias literature, Thinking Fast and Slow, and some of these other books that go through a lot of them. And they described it there's 50 different ones, but most of them are just kind of weird quirks. And confirmation bias is the dominant bias that, rules our thinking or leads us most astray. And I kind of think that's an interesting way to think about it. And I think for investing, anchoring and confirmation bias together are the two biggies. As Claude said, anchoring can happen both ways. It can anchor, like the classic value. For value investors, the trap is anchoring on a price that it used to be and assuming that it'll go back there. And for growth investors, or the trap is like anchoring on the price you first saw it and thinking that it's now too expensive because it's gone above it. Yeah. So I think that those are two really good ones. And as Claude said, something that affects us all.
Yeah, I would also say that I think it's important to have proper expectations. I think we sometimes learn lessons that aren't there to be learned. Like, a stock goes bad for you and you go, oh, this is what happened and this is what I need to correct for. When it's really important to realize in this game, you can do the exact right thing and get punished for it. And you can do the really dumb thing and get rewarded for it. And so what happens there is, on reflection, you can pick up the wrong lessons, right? Whereas, and this is what I'm talking about with expectation, like, the best investors in the world make mistakes all the time. It's the classic Peter Lynch of, if you're good, you're right 6 times out of 10. So you've got to be alert for the possibility that even though a trade or position or investment or whatever word you want to use didn't work out, it might not have been that you did anything wrong whatsoever, right? So bear that in mind as well. Process over outcome is a very important thing. So the other thing is, I always think, is just stay humble. Stay humble is the most important thing. Be very receptive to those that disagree with you. Claude made some really good points, but you've got to walk this really fine line of, as an investor, you need to have the strength of your convictions. You need to be the kind of person who can go, the market's wrong. Everyone in the market is wrong except for me. I know the shares are down 50% and there's bad result, but they're wrong. And you need that ability, right? Or the stock's doubled, but it's still cheap and I'm going to buy more. Like you are very specifically saying everyone is wrong and I am right. And yet at the same time, you have to hold this idea in your mind that you might be wrong and maybe the market is right. It's like they're diametrically opposed things. And how you walk that, I don't know how you walk that line. But yeah, at the end of the day, expect that you're going to make lots of quote unquote mistakes, even when you're doing the right thing, and always remain humble.
Yeah, no, very good position. I think humility is the first step to learning. So yeah, very cool way. Cool. All right, let's go on to the next one. We've got Thomas wrote in. He says, I'm on a Baby Giants roll, found the podcast less than a week ago and smashing out all the apps at 1.8x. Probably not normal behavior. I actually think this is, do you guys listen to podcasts on like double or triple speed?
Depends on the podcast. Sometimes I've actually, there was one I listened to a while ago, I actually slowed it to 0.8 because like I really had to think about some things. But yeah, if it's kind of stuff I feel as I know what I feel as though you're going to say, I'm just going to like burn through it.
Hopefully that's not us too much, but I think conversational ones are pretty, you can speed up.
I listen on normal speed, but yeah, I know a lot of people like that, and we probably sound little chipmunks.
Sometimes I listen on when I need to like catch up on an episode or like just to review it last time.
Yeah.
Just to finally answer Harrison's question, I wanted to say, put on record, I think my biggest bias is anchoring. I'm like constantly anchoring. Like my little brain will anchor to anything. It'll anchor to when I first looked at a company. Yeah, that's the worst one.
Yeah. There's been stock I haven't bought when I really should have, but I don't because I could have bought it. Or I did buy it at this price and then I sold. Well, that's it. I'm never buying again unless I can get that price. It's the dumbest thing in the world.
Yeah.
And then you see one where it goes up and comes back down. You're like, yes, my bias was correct. You know, like,
yes, yeah. But I'm not going to buy now. I'm going to wait.
Yeah, exactly. That's the worst thing.
Okay, cool. The rest of the question. Are any of you familiar with pre-revenue small cap Latrobe Magnesium? They have patented a technology to extract magnesium from brown coal waste, fly ash, drastically more sustainable than current technologies. Potential tailwinds with increasing demand of magnesium for lighter EV car bodies, and provide an alternative magnesium supply to China as China produces 85% of the global supply. Currently building a pilot plant in Latrobe Valley, etc. They have future plans for 10,000 tons per annum and 100,000 ton per annum plant, currently 105 million market cap. Interested in your thoughts or if you have any insight. Have you gentlemen come across Latrobe Magnesium at all? Have any other thoughts on it?
Only when the question came through and I had a quick squiz. I mean, I love the Mike Tyson quote of everyone's got a plan till you get punched in the face. And I think it's worth remembering. I'm going to come across really critical. I'm trying not to be a dick, but it's important, I think, because every single company without exception in the entire history of the ASX has a good plan. In fact, you could kind of look at it in this way. They never would have been able to get the IPO away if they didn't have something that was at least semi-plausible, right? Like, I know that things look really dumb in hindsight a lot of the time, but the fact is that they convinced a lot of people to let go of a lot of money for that to happen. So they're not patently dumb to at least to a significant enough number of people, right? So that, and I'm an early stage investor. I'm not scared of buying into companies that are pre-profit and are burning through cash. Right. I do that a lot, but I do draw, and this is just me, so I'm not saying this is the right or wrong way, but I do draw the line at pre-revenue. And when you've got revenue, you've at least shown that there is someone out there who demands your product or service and that there's a bit of traction there. So when I look at a company like this, what do you see? You see something that has really cool tech. I mean, I'm not questioning the tech. It seems really fantastic, but they're building pilot plants. Even the best businesses take so long to get up. It's the old saying of, the overnight success that was 10 years in the make. And it's a long, difficult, and importantly, very costly road. So these guys just did a raise recently. They'll do a raise 100 more times before they get there, assuming that they do get there. And again, they're not dodgy. They're not criminal. This is business. This is what happens, right? Like you put money up front and you hope to get a return on that. So for my mind, I think when I see a company like this, I either have to be someone who intricately knows the tech, the industry, the sector, and go, yes, this is something that is very likely to be proven viable and that the market will demand hand over fist. Now, I don't know the first thing about magnesium extraction or that, so it's outside of my circle of competence. I'll still invest outside of in tech that I don't have a deep understanding of, if I can see that at least those in the market are demanding it more and more, and they've got incredible sales traction. That's a different story. So for me, and again, it's just me, I chuck it on a watch list, and then I start to see that there is a path to financial viability. And it's still very early, it's still not investing in the classic Buffett, deeply moated established companies, but it's just, you got to draw the line somewhere. And I think also the other argument would be a statistical one, which is just that, well, we just know that, 90% of ones that are at this stage don't ever make it. Again, not because anyone's a crook, but because this stuff is really hard and great plans just don't always come to fruition. So I wish them well, but I'll wait. I'll wait to see some actual commercial revenues first.
Do you have any thoughts on this one, Claude?
Unfortunately, no. It's a little bit out of my wheelhouse, so I think probably just go with what Andrew said.
Yeah, I wasn't too familiar. I just had a quick look before the pod. I would probably echo a lot of what Andrew's saying on this one. I guess in one way, I kind of like that investors are investing in these kind of pre-revenue things, because at least this one is trying to do something that seems to be meaningful and helping the world, etc., contributing to society. But it's not the game that I play, and I kind of consider myself like a value investor who invests in growth, and that means businesses that have an existing business that is growing. And I kind of think of a lot of the pre-revenue ones as more like an idea for a business. Like it's not an actual business yet.
Nicely
and that's
put.
fine. Like you think of, you think of like VC as like investing in seed companies. That's the same thing. You're investing in someone who has an idea for a business. But typically even VC, most of the VC investing is in, Series A or more, where they typically have a product and have some revenue. And so I guess the way that I frame it is, it's like you have a vision for what you're building, and then there's reality. And the beauty of having revenues, particularly like Claude's talked about, I think a minimum of like 5 million or wherever you put that minimum threshold, but that's your interface with reality. And so you kind of have like a sense of, is this working? Like you're getting feedback all the time and iterating. And right now, when you're just in the idea phase, even if it's building out, like you haven't actually started interfacing with customer reality yet and some operational reality. That's where I'd want to be playing, basically, is only with that interface. And then my job as investor is kind of looking at that upside opportunity versus reality and kind of that bridge between the two. And maybe last thing I'd say, just to the last discussion as about learning the wrong lesson that Andrew said is, it's very easy to see other people that make a lot of money in pre-revenue companies and kind of learn the lesson, I should have just taken that punt on that thing. It's very rare that pre-revenue goes like just a straight line up to success. Yeah. Some pre-revenue get a big valuation, come back down, and then go up again once they get revenue. But I'd struggle to think of many examples where they just go up. And that's for all those reasons. It's not my game, but best of luck if anyone thinks they have a unique insight and can handicap those odds, etc.
I was going to make that point. I want to underline it, which is, even if this does, and maybe it does, right? So maybe it becomes this is a $1 billion company in 10 years' time. It's going to be a rough ride, and you're going to be asked to open your wallet many times along the way. So you've got to have the patience to stick it through. And that's hard. That's really, really, really hard to do. The other thing I would note as well, this has got a market cap of just shy of $100 million. Right? Like that's a lot. right? For a company that doesn't yet have a product that has been demonstrated or doesn't have customers, put it that way, right? So let's say that tomorrow they are viable and they sell $100 million worth of whatever it is that the tech that they're selling, and they get a 5% margin on that. Like, they're still on a PE of 20. It's sort of, there's just a big hurdle to overcome. So if someone who this was a private opportunity and a friend of mine said, hey, I'm doing this, it's really cool, would you be interested to throw in, a little bit of money? And it's like, yeah, okay, what's the valuation? Oh, I don't know, $1 million. That's a very different proposition to $100 million. Now, if Claude's come and said, hey, Andrew, I've got a way to extract magnesium using this. I'm like, okay, cool. How much money do you need? I want 10% at $100 million. Well, A, you need to speak to people who are far richer than me. B, no, hard no. And it's just, it sounds like it's very easy to be negative and to laugh at these companies. Every company, Amazon was this kind of company at one sort of stage, right? So, but just, the odds are against you.
Yeah, I think that's it though. The valuation affects the odds, right? And affects the expected value. So if you get a cheap enough price, then you can buy almost anything, as long as the odds are positive, basically, as long as it's greater than 0% chance, then, you can get a value for it. So that price you pay does make a really big difference. It's a linchpin of it.
100%. Now that we've said all of that, like this thing's going to like $20 by the end of the year.
You get a lot of hate mail about it. That's my life. There's been plenty of examples of that, although typically they tend to go back eventually. It's just a painful period in the middle.
Yep.
Okay, cool. What's the next one? JP, this one's actually a couple months old. Apologies to JP, missed this earlier. He's talking about Kiwi companies, which were reporting a few months back. But basically, any upcoming ones you're keen to comment on. He talked about Volpara, Gentrack, ikeGPS. Well done on the great quality stuff as always. Thank you, JP. Yeah, maybe I just thought I'd mention, because I think we chatted about it a bit before, ikeGPS. Yeah, I think I've looked at that one a fair bit. It's a New Zealand company. They make, well, how would I say it? They started off with a laser rangefinder, came to market with that, which was going to be used by builders to like take a photo/image of something and then be able to do a bunch of measurements on it. Struggled with that, finding product market fit. They finally found product market fit using basically power pole measurement for, say, maintenance of power poles or 5G installations. So someone goes out, takes one photo with their device, and that allows them to make a whole bunch of measurements about it and do a lot of decisions on the work that needs to be done. They're currently growing revenue very quickly in the US, and they've kind of, again, pivoted the business model a little bit to do more of the analysis work. So they're kind of doing it as a service, you could say, rather than just selling the product. There's a lot of stuff like I do have some concerns about the scalability of the business model. And I think that for that reason, it's I'm still giving it a cautious look, I guess I would say. It's a hard one to scale. I think that the margins are slimmer in what they're doing than a lot of what we think of as software, because they're doing some of that analysis work. And there's a fair bit of customer dependence. There's a few big companies that are doing these rollouts. So for that reason, I'm a little bit cautious on it, although I think it has made some really good progress recently. So yeah, 2 cents on that one. Another one we got from Damo. So Damo asked, if you ever get a chance to do a follow-up on PainChek, that would be interesting. I remember Claude saying, wait until they're over 1 million in revenue, which they are, but their corporate costs are still well over that. Is that normal? And what do we look to see scale past, or is that a red flag? And how would that compare to other medtech small caps like, say, Alcidion? Please stop Andrew talking about property so much. No
chance.
Actually, we might talk about property in a second. So do PainChek now, Claude. And then
okay, good. Yeah, so PainChek took it. Look, you're right that I think $1 million is a good, useful like cutoff, as in don't even bother looking at before then. And I would say that PainChek has the 1 million. That you could put it on your list and have a look at it. But the issue I have with this is at the moment, just the staff costs are almost double in the last quarterly what the receipts from customers are. And at a very basic level, if you just were like, all right, imagine this company went into survival mode, it put R&D down to zero, it ran a really tight corporate ship. Its staff costs are more than double that. So it's definitely basically what you'd call a subscale software company, I guess. It basically has an app. What it does is the app can be pointed at the face of somebody who has dementia to help rate their pain. So the idea is that, you can use this app to see if someone's in pain, even if they might not be in a position to articulate that pain themselves. So obviously super humane kind of product. And it has actually got some traction in aged care in Australia. And you could definitely imagine it getting more traction, because if you're putting your old person into a, aged care a facility, you would really like to know that on a regular basis, someone is checking that they're not in pain. I have, doubts that it hasn't reached that scale yet where it's sustainable. So it's the kind of one where if we were in like a really bullish market for these kind of speculative stocks like a couple of years ago, you could definitely argue, or maybe it's a candidate for an intelligent speculation if the growth was good enough. And if you thought, the market's willing to just speculate on growth and, that was your idea. But at the moment, that's definitely not the market we're in. I don't think it would be like it wouldn't really qualify to me as an intelligent speculation at this point, just because it's so subscale and there's no real, I would not be able to calculate on, like, if I got out a spreadsheet and started trying to imagine how things could go well for these guys. I just have no way of calculating a scenario where they don't need to raise more capital and their share price is close enough to all-time lows. So it's not exactly the ideal time to be raising capital for them either. Basically what I'm saying is, you can look at it. It has $1 million plus revenue. In fact, 1.5 over the last 9 months. But then once you move forward to that stage of actually looking at it, you could be guaranteed basically that this thing's going to need to raise more capital. It's got 550 quarterly cash receipts, 1.7 million cash burn. Like, that is high. Like, it's not insane, but it's high.
How much cash does it hold at the moment? Oh, sorry.
Perfect question, and exactly where I was going next, Matt. 3.1 million. So literally 2 quarters worth, basically. Yeah, so I just see, it says company has sufficient funds to meet the operating activities until Q1 FY 2024. There are currently 2 significant projects being FDA regulatory application and the core technology upgrade. The committed expenditure of these will significantantly decline at the end of FY 2023, and they're expecting a R&D refund of approximately 1 million in the next quarter. So basically they're saying, it's okay. We're going to be okay just because we're going to get another $1 million and we're going to cut costs. But what does that do? That pushes it out like 1 quarter. So again, if I had to guess, I was saying these guys are hoping to get their FDA application maybe approved, which isn't so hard for a medical device. It's not like a medicine. And then they'll put out an announcement saying FDA approval, la-di-da, how good are we? And then they'll probably raise capital into any share price gain. So it's definitely not a dance that I would want to be part of. And if it was, you definitely, you're kind of bottom picking, bit of a in a real, definitely a man after my own heart, Damo. Like, find some terrible shit co that's like about to die and buy shares in it. No, like, look, you can get crazy gains, right? It gets the FDA approval and then it gets a little spike because they're desperate to like promote it because they need to raise capital. There's possible ways to make money, but that is hard. And like, even though I definitely think about stuff like that, because sometimes a cool opportunity can come up, this to me doesn't look super, like, I would be concerned in this. It's just the environment. If you had, back a couple of years ago, you've got morons on the internet talking about the pumpamentals of cryptocurrency. Like, you could speculate on anything. But nowadays, I just think, it's definitely swimming against the flow. So I'd be pretty careful.
Pumpamentals. That's a great
Pumpamentals. I'm so stealing that. That's great.
Andrew, did you have any thoughts on PainChek or ikeGPS or anything else?
We spoke to I want to 2022 about this time a year ago. Really got to come back to them actually, because I thought it was very interesting at the time. I haven't done any deep dive on it, so I'm not going to offer anything above what you've already said.
Let's do some small cap good news, Claude. What do you got?
All right. Okay. Well, Mr. Go for Growth Co. chucked up a tweet yesterday, which is 2 of the ones I wanted to talk about today in small cap good news. Neither stock I own, by the way, or have any particular affinity for, but Prophecy International Holdings, which has got this sort of, I guess you'd say, legacy side of the business, but its real main growth area, I think now, is eMite. And it's basically a software as a service based custom experience and contact call center and analytics platform that combines advanced analytics, data collection and correlation, KPI management and threshold alerting into a single scalable and powerful solution. But as you can imagine, when you have people in a call center trying to get through calls, you can definitely imagine how they're using software to, measure how quickly and how efficient and etc. the people are at that job. So ATO contract, a 3-year, 2.5 million contract, nothing massive. But it's still, hey, that's small cap good news. Doesn't have to be massive. It just has to be good. Mm-hmm. So that's a positive for them. And then another company that I kind of find somewhat interesting these days called DroneShield, which basically has a sort of, I think we've talked about it before just because, shooting down drones and capturing them is kind of cool. They have actually had a real run of contracts recently, and that's been followed up by another one by a Five Eyes Department of Defense. So, Australia and our allies. Approximately 4.5 million due in each of the September and December quarters. And so it just shows, again, it's just more evidence that they are getting some real traction. No doubt the invasion of Ukraine has, really put a bit of a fire under defense procurement, especially in drone related things, because drones have been proven to be so important now in this modern war, and more so than in the past. So definitely a growth area for them. Again, this is hardly like a recurring revenue software as a service business. So who knows exactly what the profit margins they will get on their contract wins are. But, look, I just think that this is definitely more good news. And I'd say they've kind of had that moment where you'd have to start to think that they're getting more traction now. Just to put that in context, it was only in May that they had a series. They basically had April $11 million order, then they got paid for that. They've had various smaller orders as well. So definitely starting to see a bit of traction with these guys, and maybe we're going to see some much improved results when we get the full year report there. So that's a good one.
Yeah, can I just add to that? That's actually a nice example of what we were talking about before. This is a real company, right? This is a business that got really hyped a few years ago, but at a much earlier stage. I think they started getting some early revenues through, and total addressable market and this and that, and just ran away, and then came crashing back down again. But underneath the surface, forgetting what the crazy market has been doing, top line has just been growing at an incredible clip. We spoke to the CEO last year, really impressive guy, seemed to be pretty focused. So I feel as though they're getting some of the success that they deserve. And yeah, just wanted to give a shout out to that. The other quick one worth mentioning is Dropsuite, which is a business that's had a really great little run lately. A big price spike, got a very favorable write up in the AFR. So sort of been anointed in some kind of way. But another company that's just sort of bashed around at one point because it was software, and everything got hit there. But this is positive cash flow, profitable business, getting good contracts. Another bit of good news there.
Yeah, and the third one, thanks, mate. I own Dropsuite, by the way, so I wasn't going to include that one, but thanks for chucking it in. And then finally, one that I have owned in the past, have talked about as being interesting, around that sort of 60-70% range, is Mach7. So these guys, radiology software company. The quick pitch, and actually why I was sort of looking at them recently, is because in their third quarter result, they had negative operating cash flow of about 6.7 million. I'm from memory here, so forgive me if I'm wrong on that. But they also said that they expect to be cash flow positive for the full year at the operating cash flow level, which they had been in the past. And also, if you go back and look at their quarterly cash flows on the last couple of years, at least last year they had a strong result in June. So it wouldn't be that surprising if they have another strong result in June this year. So plausible, very strong operating cash flow in the final quarter of the year. Plus, then they announced quite a large contract win for them to provide vendor-neutral archiving services, eUnity, which is their viewer, and professional services, which is, I guess, implementation and setup and that kind of thing, to the Veteran Health Administration's National Teleradiology Program. Phase 1 potential, there's that word, potential TCV of 11.4 million, with the potential to increase to almost 60 million in phase 2. So often these things do come through to their full potential. And so I think that this is an undoubted positive. Plus, they already had a setup for having a stronger fourth quarter. It's one of those examples, guys, of why I can't wait to one day just retire from writing about stocks so that I can do more active trading, because I just thought it was really interesting. They had this really big contract win come out, and that came out on 3rd of July. And then basically, even if you missed the entire uplift, which if you basically bought on open, get it around 72 cents. And then for the rest of that day, 70 cents. And then it's had huge volume the next day and it's gone on with it basically. And it's the setup was already there. As in I had already identified that, it's not really a long-term thesis, but short-term, yeah, I mean, I'd be willing to hold this one into that fourth quarter because you're just expecting it to be so much better than the other quarters. So you wouldn't really be expecting it to go down on that quarter. And then there's this unexpected good news, which is a contract announcement. That's the kind of thing that for me, for a retail investor who's not, writing the articles with all of the, necessary transparency and not trading that requires, because you don't want to be like writing and trading and basically doing all that sort of stuff. Just have to pick a lane really. But the point is that you could potentially have just bought it after this announcement and then you could trade it essentially because it was just like a sweet setup for the short term. And look, I'm not that, like, it's a little bit above where I'd value it now just because it's quite a lumpy company. It's not the same as other software companies where it's mostly software as a service revenue. They do have significant non-recurring revenue. And I think that their recurring revenue is only a tad above 20 million and they're almost around 200 million market cap now. So it's like 10 times recurring revenue. It doesn't exactly screen cheap on that regard, given it's not profitable, but still like positive good news. So they make it into the good news segment for today.
Nice. Very good. Do you have something else, Andrew?
This is so off topic, but I'm going to throw it in there just because we're talking about good businesses, right? Like I took the family to Berry for a short holiday, school holidays at the moment. So we just got back last night. Anyway, it just reminded me that like we talk about SaaS and software and AI and all this bleeding edge kind of stuff and the investment opportunity. Anyone who's been to Berry in New South Wales down the southern coast, there's a little donut van that's there. And this thing sells like $20 for a dozen donuts. And whenever we went past this thing, day or night, weekend, weekday, there was a line a mile long. And I just thought to myself, God, what the hell was I thinking starting Strawman or doing anything else other than selling donuts in a country tourism town? Because you think about this, your raw material is dough, cinnamon, and oil, right? Your CapEx investment is a literal caravan with a few, they've added a coffee machine. There's a few other bells and whistles that are in there. They're like, that's it. They do donuts and milkshake. So very capital light setup costs, insane gross margin, incredible turnover. You got a couple teenagers there manning the till. And I was trying to sort of like, while I was waiting, because they cook them all fresh. While I was waiting for my donut, I was trying to sort of estimate daily revenue and turnover. I'm convinced that this thing must do like tens of thousands of dollars in top line in a week, right? On operating costs that couldn't be more than a few $1,000s. And I just thought, I'm not gonna, but I really fantasized about, I'm just going to move to one of these towns and just do like one niche, like a chocolate shop or something, like just really ultra niche.
We are on the same wavelength, bro.
Do you know what I mean?
We can do it. It's my dream too.
I just think, wow, there is something to be said for that kind of business. And you do one thing, you do it really well. You're able to charge a premium. There's no competition. You've got cashed up tourists coming through. It's like, man, they've nailed it. Well done. Hats off.
Why is there no competition?
I
just waiting for you. Are you going to come and ruin their stuff? Because
I wouldn't do it. I wouldn't do it.
Set up next door.
I was trying to think of what is it that you could do that just sort of sets it apart. It becomes a destination 2 hours from Sydney, right? So you've got a squillion people who love to get away on the weekend. You got a bunch of cashed up boomers with their caravans and RVs driving sort of through there. You got all the sort of the middle-aged sort of midlife crisis bikies riding through there, all cash overflowing in their wallets. Like, I'm going to stop and get a coffee and a $20 donut, right? Like there is something to be said, I think, for when you're looking at creating a business. Keep it simple, right? Like there's some pretty cool things. And this is a business never going to list. And why would you list, right? I'm just going to like sit there and just at the end of the day, go pick up the till. And yeah, anyway, I was just blown away.
I'm sus on it. I think if the economics are good, then you could just go do it, right? You could just open up next door. What's the unique thing? Are they well known? Is it like a unique thing that everyone?
Yeah, it's a bit of an institute. It's been there for forever.
All right. I'm more with you now. I get what you're saying. It's like one of these destinations you stop off, like that weird pie shop between the Gold Coast and Brisbane.
Yeah, but I will say this: it's like they're insanely good donuts, right? Like they're made to order, so like they're fresh they're hot when you get them. Like the next day they're stale and disgusting, but. Because we bought way too many.
I wonder if they've had to see off any like competitors over the years. Like has someone ever moved in? Like has an Andrew Page gone down and like, I'm going to take these guys on? And you just like
Yeah. I mean, but I was actually thinking
maybe
like
there was like a donut war that we don't know about.
There
like
could have
maybe
well
there's,
been.
They're the emergent winner of the donut wars.
One of the members on Strawman said that actually the guy who owned it sold it recently, a couple of years ago, and so I wonder
how much.
No, I would love to know, but it's just sort of like if the owners of that donut shop are listening, I mean, I'll make you an offer, right? Like, show me the books. I'd be very interested.
Very cool. All right. Did you want to talk about property at all, Andrew? Do we have some in on that one or no?
Well, look, just a bit of background here. Firstly, congrats to Claude. He's a homeowner again, so well done.
No, I'm not. My wife bought a house. I get to live in it though. So.
Okay, well, hey, nice. Well,
Good
congrats.
times.
Congrats to Chloe. But it just sort of no. And then you said, "Do you want to talk about property?" And I said,
all right.
Claude suggested
I do. I'm ready. Yeah, I'm ready for property to go up now, guys. So
okay. So the talk is
get on
property
board.
to go up. Okay.
Yeah.
Great. You're part of the problem now, eh?
I know inflation's a problem, but I'm ready for it to ram again. Like,
well,
let's go.
I'll say this just to make it more of a sensible podcast again. So the RBA held rates steady this week, as everyone knows. I am of, and then I saw this article, I tweeted it out actually on the AFR, which said 24 of the economists that we surveyed said that rates are going higher and aren't going to turn until like midway through 2024. And I just thought, if that is not the strongest signal ever that rates are about to plummet, I don't know what is. Because when you see headlines like that, and I'm being like facetious here, but only a bit. Like, it just feels as though whenever you have such strong consensus amongst sort of like the mainstream economic profession, I just think I'd almost be willing to bet that rates are going to roll pretty hard at some point. I could be wrong, and it's like that's.
So you think we should be doing more property investing?
No, I'm just saying that. Well, I guess
nice judo move.
I guess the point that I would make is you got two decisions, right? You let inflation run hot, or you completely destroy property and therefore the Australian economy. And now, which one are you going to go for, right? I think if I was anyone who had my hand on the levers of power, I'd go for one over the other any day. And that.
Serious question though, isn't that what Claude's like? What the world you think is going to happen would be very good for property. So
yeah.
But I don't know if it's better for property or kind of growth stocks and stuff though, because at the moment, if anything, you could argue, I'd say for me, equal weight property is having like a home and a holiday house. And then if I want to actually be long property, then I need to have an investment property beyond that, which we just
Can I just say screw you and your holiday house? Like, screw you from all of us renters. Like, I would just like a house to live in, and you've got to at least have a proper holiday house.
I deserve that. Yeah, I deserve that. Yeah, no, I'm definitely part of the problem, guys.
I guess the other thing I would say is that what's interesting about it is that there is basically an affordability constraint here. So I think it would be good for property if interest rates did roll, but that's just because it allows more money to sort of flow towards property. But we're already at the extreme. Like, even when we had rates at virtually zero, that shot was fired, right? So people borrowed up to the extent where they can. So now it's like whoever else is on the sidelines that can now bring in on the margins, is that going to be enough? Otherwise, it's just people with equity flipping amongst each other, and that just mathematically doesn't work, right?
When you create this property bubble situation, what you're doing is you're making it increasingly more important who your grandparents were or who your parents are, basically.
Yeah.
And the only way to fix that not the only way, but the most efficient way to fix that is just to tax land. Watch someone like me squeal if you suddenly start like taxing land. And I'm like, wait, I don't like relatively low income, asset rich like people. Like, they're the ones you need to target. Like, otherwise you're just letting us get away with, just basically having a grandmother that gives you money or whatever. So
this is the reality of it, man. So if you're a first homeowner, there's two possibilities. You've got bank of mum and dad helping you out, or you're a 58-year-old virgin who's never had kids and has like lived on 2-minute noodles for the last 30 years. Like that. They're the two people who are buying property.
And there's like really talented people. There are people that genuinely, but it's just really talented. Like, some of my friend, one of my oldest friends who's like, management consultant, and his wife's a lawyer, it's like even the people that are millennials that are the most successful, like off their own bat that you can find, and double incomed, even they, you know, are either getting help or they are not living in a house that's as good as what they grew up in. You know what I mean?
Can't do it. It's the maths. Do the maths. It doesn't work, right? It just doesn't work.
There's definitely an intergenerational problem here. And if you let this sit, then just basically what it means is it's like, all right, well, what boomers have you got in your corner?
Yeah. Sorry, Matt. By the way, I see you sitting there with pursed lips, but you asked for this, right? So you know, you just got to.
Technically, Claude asked for it. I just seeded it, but yeah, fair.
No, but I actually did have one serious question for you guys, which is like, all right, so is it better to go into more
Should I buy a
property?
second holiday home or a third holiday home?
Do you reckon land or stocks is a better option?
Ooh, I would say in both cases, like I would be stocks I wouldn't go anywhere near right now, and some I really love. And same with, I'm sure that there are some really sensible property investments available if you look hard enough around the country somewhere. So
property investing is not that different from stock investing. You just choose you want to get the worst house on the best street kind of thing, and then you make it not the worst half.
I think property is pretty different. You don't have 100 baggers in property, you know, like there's so much more variance than inefficient. Well, not necessarily inefficiency. There's a lot more variance if you're right, I think.
I guess you're still looking for mispricing. That's the only thing.
For sure. No, I'd agree.
Yeah. I am not aping 5-to-1 leverage into a negatively yielding asset anytime soon. I just call me crazy.
Yeah, no, see, I'm kind of a bit off. I'm a bit off property. Like it doesn't look like that good a setup to me because basically, it just doesn't look like a good setup to me because being I'm not saying I feel sorry for landlords. Like I definitely don't, but I don't think the returns are very attractive. Like I was trying to crunch the numbers for ages in investment properties in the ACT, and I just can't make it work at all.
No, it doesn't work.
So it just seems like from an investment perspective,
I said to you when you're telling us it's like, hey, we got a price and and I think it's a good investment. I reiterate to what I think that the return is massive. Just don't look at it in a financial standpoint. It's somewhere to live and raise a family. Like that is an insanely good investment, right? As long as you're not like stretched to the limit and you can sleep at night. Like who's going to argue? I'm the last person in the world to argue against that. That is what property is for, right?
As you know, the main way I measure achievement in life is how big is the biggest tree that you own.
Oh, then you've made it. You've made it.
I have just gone up massively in my own esteem. Like, oh yeah, that is a damn big tree. So
just make sure you're not blocking anyone's view because someone's going to creep into your yard at some point and poison.
I'm not. I can't give you too much information as where I live, but yeah, I've got a big ass tree, and that's a definite plus now. So
nicely done.
I think as soon as I saw that tree, I was like, yeah, it has to be this place, and I started praying.
Okay. All right, good stuff. Well, maybe we'll wrap it there, gents.
You sure?
Yeah.
I can keep going.
That's good. Let's wrap. Anybody who owns a particularly large tree, please send me photos and I can send admiring comments back.
Let's do it. Let's do a tree thing. Yeah, send in your tree photos or any other questions to @BabyGiantsPod and Twitter. Thanks very much for listening.
Bye.
Thanks, everyone.